please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
All right, straight away then, let's address the big movers in today's trading action. This is our movers and shakers segment. Ekta, Fortis numbers expected today?
Yes, absolutely. Well, Fortis is going to be in focus because there is that board meet which is going to take place today. So we have the Q4 numbers which will be released, as well as the Luthra and Luthra report, which is basically an internal investigation about issues such as, alleged siphoning of funds, etc. by the Singh brothers. So all of that is expected to be out in the open, and hence if in case the Luthra and Luthra report is much worse than what already the bidders are expecting, then maybe there could be some amount of change in thought when it comes to the final bids, which are expected to come through on the 14th of June.
All right, Ekta, thanks so much for that. Well, PNB is doing well in today's trading session, while PNB Housing, we saw numerous large trades today, and that stock, in fact, was under some pressure. Abhishek's with us to run us through the details on both those two stocks. Abhishek.
Well, Nigel, PNB on Friday after market hours announced that they are looking to pare down their stake in PNB Housing, ICRA, CRISIL and BSE Limited. Now, what this will mean is they are looking to capitalize themselves or strengthen their capital position. After Q4 FY18, the worry on the street was the fact that their CET1 ratio, that is the Common Equity Tier 1 ratio, fell below 6% mark, and that could trigger in terms of prompt corrective action framework of RBI. So PNB holds about 33% in PNB Housing Finance, which according to yesterday's or the previous closing works out to close to 6,260 crore. They also hold about 3.4% in ICRA, which is valued at 113 crores. Back to you.
Okay. Thank you very much for that. Ekta, Sun Pharma, the biggest gainer on Friday, continues with its rally today as well?
Well, yes, there's definitely very positive news which came in on Friday. So there was the voluntary action indicated status which was provided by the US FDA on their most important facility when it comes to the US. The Halol plant, which is located in Gujarat and has been under warning letter since 2015. So obviously the street was very optimistic on that. We saw delivery buying of around 500 crores on Friday also, which came in. And the brokerages are positive as well. So for example, Motilal has raised its target price on that particular stock, but a couple of others, say something like a Macquarie, has mentioned that the Halol resolution is something which is probably already factored in based on the management commentary that we had received from the company post Q4.
Okay, all right, Ekta. Let's hop across to Sonal. She's joining in to round up all the stocks that are on the news today. Sonal.
Thanks a lot for that, Nigel. I'll start with Mahanagar Gas. Well, the stock is in focus today because the company has increased the prices of CNG and PNG with effect from 9th of June. For CNG, they have increased the price by around 4%. For CNG, it has been increased by around 1.5%. This was done because of the rupee depreciation that we saw in past few months, and also because of the higher raw material prices. Now, CLSA says that this move is very positive, and this will not only protect the current margins, but will also lead to better margins in Q1 of FY19. They also say that this will reduce the 30% discount at which it is trading to IGL, and overall for city gas distribution companies, it says that recent price hikes taken by the company will lead to a better performance in coming quarters. The other stock in focus is Sagar Cements because it came up with the sales and production numbers for the month of May. For production, that increased by 18% on a YOY basis, and the sales that increased by 19% on a YOY basis. Avanti Feeds is another stock doing well in trade today because they have an EGM on 14 June to consider stock split and also issue of bonus shares. Welspun Corp also won a couple of orders today. Won an order for supply of 72 KMT of API pipes to America's market, and right now the order book stands at around 110 billion rupees. That stock is doing well in trade today as well. Inox Wind is in focus because their statutory auditors have resigned, and that was done because of the time constraints that the auditors were facing. Company spoke to us. They told us that we cannot compare this auditor's resignation with other exits, and also that the auditors resign on account of time constraints. We spoke to the management today. Let's listen in what they had to say.
Relationship with the auditors continues, who are the other ones, because the auditors were also our tax auditors, and therefore they'll continue to work with us in terms of the tax audit, in the filing of income tax returns and the assessment. This is a completely normal resignation occasioned by time constraints because of their other commitments, and there's nothing untoward as far as this resignation is concerned. In a sense, this timing is not inopportune because at the next annual general meeting, which is scheduled sometime in July, the shareholders will have an opportunity to appoint the new auditors, and it was necessary to have the new auditors in place before the limited review results for the June quarter would need to be announced.
Okay, management clarifying that their auditor resignation is different from the kinds that we've seen in other companies. Ekta, back to you once again, Alembic Pharma.
Well, yes, that stock is in focus because they've received approval for an antidepressive drug, which is basically called Wellbutrin generic. Now, why is this important? Because the drug is only $37 million in terms of market size in the US, is because it has been received from the Panila facility that the company has. It's a formulation facility. It manufactures for the US, and in March of 2018, it was inspected by the US FDA, received 3 observations. So there was obviously some amount of trepidation on the street that whether or not they would receive an approval from that plant. Because they have received an approval from that facility, that means that it's a go-ahead from the US FDA largely, and that they should continue manufacturing largely from there. This is the first approval which has come through post that inspection.
Okay, all right, Ekta. Thanks so much for that. Stock holding well in the green. But here's a quick recap of all the buzzing stocks we just covered. We have Fortis, PNB Housing, PNB, Sun Pharma, Mahanagar Gas, Sagar Cements, Avanti Feeds, Welspun Corp, Inox Wind, and finally, Alembic Pharma.
Get into a break then. On that note, on the other side, more on the markets and individual stocks. Stay tuned.
Max Life walked out of the race to acquire the 6,000 crore deal. That's to acquire IDBI Federal Life. CNBC TVT now learns that IDBI as well as Federal Bank, they failed to respond on critical prerequisites that were raised by Max Life, and that may even lead to the deal becoming unviable for the sole bidder that's left in the race. That's Aditya Birla Sun Life. Yash Jain, he's been on top of that. He's joining us with all those details. Yash, take it away.
Well, Nigel, let's just first understand where does the IDBI Federal Life deal stand after Friday's development. So on Friday evening, Max Life informed the exchanges that they've decided to walk out of this particular IDBI Federal Life transaction. The parent company, which is Max Financial Services, also said that they've also dropped the plan to raise approximately 5,000 crore rupees, which they were intending to do to support this particular acquisition. Now, why did Max Life opt out of this particular transaction? What we're given to understand is that IDBI Bank and Federal Bank failed to respond to Max Life's prerequisites which they had put on the bancassurance front for this particular deal to go through. Max Life had set certain timeline, and if they would have received any sort of reply, which they didn't, then they would have participated in the deal, but that failed to happen and they walked out of this particular deal. Now, Max Life walking out of this particular deal leaves only one player in this particular transaction, and that is Aditya Birla Sun Life Insurance. But one needs to remember that Aditya Birla Sun Life Insurance has also placed similar prerequisites in the deal, be it in terms of exclusive bancassurance partnership, the time period being 10 years, and as well as performance guarantees. What I'm given to understand is that it's unlikely that IDBI Bank and Federal Bank will be able to really incorporate these prerequisites in the form of an agreement. And if that happens, then there is a high possibility that Aditya Birla Sun Life may also not be interested in pursuing this deal forward, and the deal would face a standstill at this point of time.
Okay, Yash, thanks very much for that. Also, if you could explain how this first deal was similar to IDBI Federal Life and throw more light on the rationale of Max Life's decision to walk out of this particular deal.
So, Reema, I'm not suggesting that the deal which I'm going to talk about, the India First Life Insurance deal which took place 10 days ago, was a reason for Max pulling out of this deal. But just try to understand the similarity in the two deals. India First Life Insurance, a deal which happened 10 days ago, there Warburg Pincus, the private equity player, picked up 26% stake of Legal & General for a sum of about 710 crore rupees. That particular transaction valued India First at about 2,700 odd crore rupees. Now, the most important asset which India First also has, similar to IDBI Federal Life, is their strong bank assurance network. Now, just try to understand, Warburg Pincus essentially, and the valuation of 2,700 crore is for a bank assurance network of about 8,000 bank branches which India First has. Whereas at the same time, if you see IDBI Federal Life Insurance, here there are two bidders who are really fighting it out, paying approximately 6,000 crore rupees for just about 3,000 slightly over 3,000 bank branches. So in terms of assets which were coming in for the amount which was being paid, this deal was certainly very expensive, and that is certainly a thought which would have come to the buyer's mind as well. I'm not suggesting that that was the only reason why they pulled out, but yes, it's certainly a very important thought in terms of how expensive the deal is to ponder upon.
All right, thanks so much for that, Yash. Well, on that note, let's get in some market opinion coming in from Andrew Holland of Aventis Capital Alternate Strategies on the road ahead for the Indian market and the impact of Fed's rate hike on emerging markets.
The macro is looking bad and the micro is looking better. But unfortunately, a lot of the market consensus for earnings for this current year was around 25% earnings growth, and that's being brought down to around 20 so far. We're at 15, and we think earnings will be again brought down. I think some of the pain that's been felt in mid caps and small caps is probably here to stay. The easy money was made last year, 2017, and I think all kind of mid or small cap stocks were kind of tarred with the same brush of they're all multi-baggers and with probably not a lot of to back that in terms of either the management or the businesses. So we will see that differentiation taking forward, but unfortunately on the way down it brings the good stocks as well. So that will be the opportunity, but the pain of that happening is very acute. Expectations are for 25 basis points, but really it could be more, and it could be more because one, the jobs data is so strong in the US, inflation's picking up, and they really are behind the curve on this quite considerably now. I mean, we're still at easing rather than we're at tightening. If you see anything more than 25 basis points, then the market's not expecting it, and that would bring global markets down, but also more importantly, it'll bring emerging market currencies under further pressure as the dollar gets stronger on the back of that.
Holding above that 10,820 mark, that was the previous peak for our markets from where we had reversed. So crossing that on closing basis will be crucial. We had a gap up opening, and as you can see, we've built on that, and even the little bit of a dip that we saw an hour ago has been bought into. And more importantly, this outperformance in the mid-cap space continues. So the mid-cap index is now higher by close to about 0.7%, and the advanced decline ratio has held steady through the start of the trading session. But it's time now to hunt for some value, and my colleague Abhishek is here to present a case for a stock which has seen a virtual bloodbath earlier this year. Abhishek, over to you. Which is the stock that you're tracking?
Well, the stock in focus, Rima, is Punjab National Bank. The stock is down about 49% in YTD, that is 2018, while it is down 62% from its 52-week high that it made on 26th October 2017. Now, why did the stock fall? The stock fell on the news of the fraud that is related to Nirav Modi's case of $2 billion. So that triggered the starting of the selling point, and then they reported the worst ever quarterly performance in Q4 FY18, wherein they had the highest quarterly net loss owing to the stress in the balance sheet. Also, one of the factors that their CET1 ratio, that is the common equity tier 1 ratio, fell below 6% level, which had the street talking whether that bank can go under the prompt corrective action framework of RBI. Now, what are the triggers for reversal? The government is looking to generate about 12 to 13,000 crore by H1 FY19. This can be done through various methods, that is the sale of non-core assets, subsidiary stake sale, NPA resolution. So for one example, PNB on Friday after the market hours did announce that they are looking to pare down their stake in PNB Housing Finance, CRISIL, ICRA and BSE Limited. The deal to sell Bikaji Kama headquarters is also on the way and in final stages, which can lead to a 13 crore income for the bank. There are also the resolution of stress assets like Bhushan Steel, for one example, can lead to 900 crore coming back to the company and aiding the profitability. Most of the stress have been recognized in Q4 FY18, and the incremental stress asset, if you look at the presentation, is on the lower side in last 4 to 5 years. So brokerages have a mixed view. Morgan Stanley has a buy recommendation with a target price of 125. Kotak Securities says that they have an add recommendation with a target price of 90, but they say that expect strong recovery and upgrades over the next few quarters, while medium-term outlook actually remains less uncertain. Nomura has a reduced rating with a target price of 75. If you look at the peer comparison, PNB trades at 14% 12% discount to FY19 valuation that the average top 5 PSU banks have, and about 12% discount to FY20's valuation. Standard disclaimer, this is not a stock recommendation.
Okay, all right, Abhishek. Thank you so much for that. Well, we were talking about Tata Motors just a short while back. I think Mahindra and Mahindra should come up for you on the screen. Now, that stock has moved to the high point of the day. So let's get the intraday chart of that stock. That's what's helping the Nifty really to move higher. Just take a look at that. Mahindra and Mahindra at the high point of the day. L&T as well. That's a fairly big boy. That as well has moved higher. And that's what's helping the Nifty to hold with a gain of around 60 points odd. Even from the broader markets, a couple of stocks that are moving with strength, the likes of Godfrey Phillips. Pull up the intraday chart. The stock was as is up close to around 1.5%. Now it's sitting with a gain of around 2.8%. So that's moved higher. Siemens is the other one. That stock as well should come up for you. Remember, the numbers didn't look very, very good. The stock did see a sharp correction post the Q4 numbers. But now, in fact, it appears there are some signs of buying on that one. It's gradually moving higher. But let's do one thing. We'll slip into a short break. You come back, we'll tell you how to trade the Nifty. Ashwini Gujral as well as Prakash Kaba, both of them will be with us.